I would really like to have a futurarchy market for Allo. I would love to know where the TVF, total value flowed, through the Allo ecosystem is coming from. Is it conviction voting? Is it commitment pooling? Is it quadratic funding? Okay, this month, the most TVF is coming from mechanism X, but 3 months ago, it was coming from mechanism Y. That data is really important to me as an ecosystem builder.
It's Futarchy. Futarchy is basically decision markets applied to policy. And actually, in the original paper that Robin wrote a very long time ago, he really speaks about policy as it relates to the government. So it's really just Futarchy is decision markets as it relates to making policy decisions at the highest level. We're kind of taking that and we're just kind of abstracting away the government and just saying governance. And then that's really what we call Futarchy.
Amazing. Walkie, what do you got? Let's grill him. Just grill him on everything. Let's talk legal. Let's talk all the legal hurdles. It's everyone's favorite.
Let's do it.
You thought we were going to thought lead about on-chain capital allocation, but this is actually a final exam.
This is what I expected. That's what I told the team.
Welcome to the Allo.Capital podcast. If you're just joining us, we are doing seasons, and this season we are summoning Allo.Capital, a new spin-out from Gitcoin that's designed to build the capital allocation layer of the tokenized internet. We think there's big upside here. Capital allocation is a multi-trillion-dollar design space. VCs, governments, NGOs, and DAOs all have to allocate capital, but it's also a place where you can start small. Every time you spend money, you are allocating capital. We are threading a through line, partnering with builders, researchers, and funders to figure out what on-chain capital allocation looks like, building and testing and dog fooding it on-chain. If you want to learn more, you can visit our website at Allo.Capital, where you can download the Allo books for free, play with some of our dApps, join the Telegram, or participate in the DAO. All right, my guest today is Vaughn Mackenzie Landell. He is CEO and co-founder of Butter. Vaughn wants society to make better decisions. He believes that our hardest problems are rooted within our institutions, and that blockchains, by accelerating the feedback loop on institutional design, are the solutions. Butter addresses government alignment challenges through mechanism design. They implement treasury governance mechanisms, leveraging prediction markets, and building upon the principles of futurarchy. So that's what we're talking about on this episode. We're talking about futurarchy and conditional funding markets. In what ways can we apply info finance and prediction markets to allocate capital better on chain and solve Ethereum's biggest problems in the contemporary landscape? So we talk about futurarchy. We talk about his pilot with the Optimism ecosystem. We talk about an upcoming pilot that I am trying to stimulate with GG24, Gitcoin's 24th quarterly matching campaign. And then we just sort of play jazz on-chain capital allocation, futurarchy, info finance. And I think this is a big brain episode, but it's also very approachable once you understand the core primitive of a prediction market. So a fun episode for traversing the design space of on-chain capital allocation, and I think you are going to enjoy it. Hi, Vaughn. How are you?
Really good. Thanks, Kevin. How are you?
Excited for the conversation. Also, hi, Rena, my co-host and co-founder.
Hi, Walkie.
We're here today to talk about Butter, futurarchy, and conditional funding markets. Why don't you splunk us into the deep end, Vaughn? What are conditional funding markets?
Absolutely. So let's say we start with a prediction market. Most people have a good model of those. We're going to look at an event that's about to happen in the future, and we're going to try and predict the probability that that event comes to pass. And then at the end, we resolve the markets when the event happens. Polymarket's been doing this now for a while. I think they've traded about $12 billion just on predicting future events. And there's a really great June dashboard up there, which basically says that Polymarket about 1 month out is about 91% accurate. And this is an incredible statistic. And the idea with conditional funding markets is just simply saying, what if we took this prediction or this predictive power and we used it to predict which of our investments are going to produce the most growth, for example? And you can kind of take this idea and you can kind of standardize it and say, well, what if we just had a protocol for trying to predict the result of capital allocation decisions, and then actually using the results, the predictions themselves, to actually allocate the capital. But that's what conditional funding markets are, is kind of in the title itself. And so that's what we've been working on. And we most recently launched one with Optimism last month.
So it sounds like futurarchy is sort of like prediction markets, but for public goods funding, or prediction markets for ecosystem growth. Is that too reductionist?
Not necessarily. I think the place to start is to think you have one huge circle, and that's like markets, right? And then one small version of that, one small part of that circle is prediction markets. These are predictions about things that are going to happen in the future. And then a subset of that is futile, or actually, the subset of that is decision markets. So these are prediction markets that you're going to use the results of those markets to make a decision. So the classic example is hiring or firing market. So should we fire the CEO? You run a market based on the change in price if you hire or fire the CEO. Sorry, if you do not fire the CEO. And then once you're done, you use the price to actually decide whether to hire or fire the CEO. And a subset of those decision markets is what we call Futarchy, or as Robin Hanson, the inventor, calls Futarchy. Futarchy is basically decision markets applied to policy. And actually, in the original paper that Robin wrote very long time ago, like in the year 2000, he really speaks about policy as it relates to the government. So it's really just Futarchy is decision markets as it relates to making policy decisions at the highest level. We're kind of taking that and we're just kind of abstracting away the government and just saying governance, and then that's really what we call Futarchy. So where we are with conditional funding markets, which is decision markets for capital allocation decisions, we're really being particular and taking a nice slice of that. So we're even smaller in a really small wedge of that entire pie. And that's where we are when we talk about conditional funding markets, just a subset of Futarchy.
Could you take us deep on the experiment that you did with Optimism so that we have a tangible example of this? And then, Karina, next question will go to you.
100%. 100%. So a really good way of thinking about this is just thinking about any typical grants program. So you could take Gitcoin grants, or you could take an L2 or a DeFi protocol. They have some capital and they want to distribute it to their ecosystem. And in this example, we have Optimism. Optimism obviously are building out the super chain. And one of the things they're really interested in is how they coordinate resources across all of those chains. And so this really was a kind of an experiment to see if they could coordinate capital allocation across a whole bunch of chains. So they took an amount of OP. In this example, it was 500k OP, and they were trying to, actually, it was a million OP, but split in two. And they took 500k OP and they distributed it using a conditional funding market. And they asked the participants, forecasters who turned up, to estimate the impact on Superchain TVL for any of the participants. There were 22, if they each received 100 KOP, so just a fifth of the 500 KOP. And then we ran that few target experiment for about a week, and we used the results. So as forecasters were using the Futarchy, they were changing the forecast TVL. Right. So we were basically saying, do we think the TVL is too low or too high? And then buying or selling the tokens in the market, the up token and the down token, to adapt the market price. And then at the end, we used the actual final TVL estimate to allocate the capital. Now, alongside that, there was also the Standard Grants Council running. And that's where the other 500 KOP went. So we actually also have this comparison now between two different mechanisms, which is going to be great when we kind of reach the 3-month mark and we see what the actual results are. But yeah, that was the idea. So a simple objective, we're trying to increase TVL across the superchain. We're going to use a conditional funding market or a Futarchy to predict the result of making these allocations, and then use that prediction to actually distribute the capital itself. And now we wait.
Bated breath. Very excited for that. Thanks, Vaughn. You've talked a little bit about the mechanism itself and then, of course, what you're doing in the experiments. But you and I have chatted a bit offline about this. Why is this such a powerful mechanism? Why is it so important? Um, to me, it's important, but why do you think it is, especially in our current ecosystem?
Yeah, this is really a great question, because I think that it depends really where your focus is. Now, the reason why I think we like to use markets in general is because markets are probably one of the best, or at least one of the most well-tested mechanisms, mostly because we have lots of them, right? So we see them all the time. There's lots of history and literature on how markets perform, but they're really decentralized, right? Like anyone can spin up a market to sell or buy something, and most people understand how they work. And this is in comparison to other mechanisms we may use, which can be harder for people to understand. Obviously, we have quadratic voting and funding in Gitcoin, and people have to try and acclimatize to that. It takes some onboarding, but most people have an intrinsic understanding of market. So this is one of the great uses. It's decentralized, but also very easy for people to understand, like a well adopted technology. And if because it's decentralized, it's actually just very hard to bias. One of the problems we have in our ecosystem is that sometimes when we implement decision technologies where we have a large group of people who come together to try and make a decision, it's really difficult to guarantee that decisions can't be biased by some private interest, special interest, some minority, sometimes a majority, or even just the big whale who just has a significant amount of tokens, for example. We want mechanisms that aren't, not just that they're not biased, but they don't become easier to bias as they scale. And that's the other problem. So the other problem is sometimes these mechanisms work well when they're small, but as they scale, they become harder to reason about and harder to prove that they do the thing you want. And so this is the other benefit of markets. Markets work fairly well at scale, right? And so the other thing about Futarchy is that it can scale well to tackle some of the problems we have in crypto. We have a significantly large amount of capital. We have a ton of people. Basically, anyone on the internet can turn up and opine and give their input. And so maybe we prefer that they give us an input on the price of an asset rather than asking them their preference on an outcome. And then the other one is that they tend to, at least in history, we've seen the prediction markets tend to be more accurate over time. And this is when you compare them. Specifically, there is a paper on election results, and they tend to be more accurate and have been more accurate. I think it was 74% more accurate than polls and so on. And this was tracked over a number of years, actually decades, on the Iowa electronic markets, where you can, in the US as well, go in and bet on elections. So that's really why we like them. That's why we think that they're a really useful technology. Actually, an incredible opportunity for our ecosystem.
Amazing. Walkie, what do you got? Let's grill him. Just grill him on everything. Let's talk legal. Let's talk
Yeah.
all the legal hurdles. It's everyone's
You thought
Let's
favorite.
that
do it.
you thought we were gonna thought lead about on-chain capital allocation, but this is actually a final exam. Um,
I,
uh,
this is what I expected. That's what I told the team.
so I want to draw a line between the work that you're doing and the vision for Allo.Capital, which is that, the internet changed how we move information across society. Blockchains are going to change how we move value across society. The internet brought us packets of information. Now we have packets of value, scarcity that can be moved around. Ergo, we're going to completely reinvent how capital is allocated as more and more assets get tokenized. And we now have programmable blockchains, and we can do better on-chain capital allocation. That's sort of like the thesis for Allo.Capital. And what Rena and I and the Illuminati are trying to do is to build a network where builders who are building within this design space get accelerated with technology and distribution and just connected to other builders. We're still figuring out the exact offering there, but I'm wondering if you draw a through line between CFMs, conditional funding markets, the broader design space of info finance, and then like the most broad aperture, I think, is on-chain capital allocation and where the space is going. You know, if you could kind of like play jazz on top of that thesis a little bit, I'd love to know where you think info finance is going or where you think CFMs are going in the next 5 or 10 years.
Yeah, I've got. I mean, I've got a couple of things to say on info finance, but I think we could start with Allo and I guess where I think the opportunity lies for Allo. I think one of the interesting things that we've got to watch as an ecosystem is watch the development of Gitcoin and Gitcoin iterating over time on its kind of role. And I think at the very beginning when Gitcoin launched, there was this like incredible moment when we all felt like we kind of unlocked something. This is incredible. We can actually fund things at scale. People were piling in, people were opining, people were giving their opinions. And then we started to watch it kind of fray. Like it suddenly felt like it wasn't clear what to do with something, and you see like like when a dog picks up something and it's so excited, it's like, but it doesn't really know what to do with it. It's like, I don't know what this is, but I'm excited. And I feel like that's where we got to as an ecosystem. We felt like we had unlocked something, and I think that's the thread that we're now pulling on. I think we're saying, well, look, we have this incredible technology. We actually have this thing we're working on, and the title is "Speculate to Allocate." And I think it's that we have something in crypto that works really well, and we're still all trying to figure out how to harness it. And one of the things we know we can do well is we can allocate capital, we can allocate resources. And it's a long held belief of mine that really governance in general is actually mostly about distributive policies. It's mostly about allocation. It's not really about much else. Like you make one decision. Like we all get together and make one decision. The result of the decision is normally that some group is getting more, and some group is getting less. This is a distributive policy. It's a allocation decision that we're making ultimately. And actually, if you just look through most DAOs on like Tally or Agora, and you look at most of the decisions they make, most of them are transfers, right? They mostly move capital. So this is kind of my core thesis, and this is why I think I'm really excited about Allo and Allo's thesis, because I think the main goal here is to try and take a leap forward from the kind of early energy of Gitcoin and figure out, okay, how can we apply this? And I guess like for me, it feels like a more direct, repeatable way. So that's my thinking on Allo. If I kind of zoom out and I think about info finance, I think there's something about crypto that I always feel like one of the really cool things about the space we live in, the ecosystem that we all get to enjoy every day, is that you can read the Ethereum white paper, and as you read through the white paper, you see like literally listed most of the things that people work on, like they're kind of in that white paper already. And I think info finance is again, it feels like it's one of those use cases that was poorly um, like underexplored in the early stages of crypto, because I don't know if you've read the Carlota Perez book on like technological developments over time, but it felt very much like in the very beginning of crypto we tried 20 things and only two of those things worked at that time, and what we needed is all of this fundamental or foundational technologies to be built out first before we could then retry some of those early ideas. And prediction markets is one of those. And if you think about prediction markets, they do represent this like DAC style technology. They are truth seeking, like truly truth seeking, actually a new technology entirely, something that we could do in a way that's completely unbiased and could just unequivocally produce the truth over and over and over again. And there's like truth in our media and truth in our news, but there's also truth in our decisions. There's like making sure that we're not the ones biasing ourselves. And I think this is where I see info finance being incredibly powerful just as a concept. And it's something that we don't necessarily try and over aggressively embed ourselves in. But I think that the concept is incredibly powerful. And I do think that like if you take CFMs fit inside that technology, right? They are a truth-seeking technology. They are saying if we have some capital to allocate, we really only want to allocate that capital if it produces the effects we want. If it cannot produce the effects we want, why would we allocate the capital? And I think if you kind of circle all the way back to the top and you think about Gitcoin at the very beginning, it felt like we were directly targeting the things we cared about, but over time we started to become uncertain. Are we always still funding the things we want? Are we now just funding the things people like? And I guess that's really for me the kind of intersection of those two things. Like we want to get to the truth, and we want to be able to do that at scale. And if we have to sacrifice some of that truth to get to scale, then it's probably not worth it. And that's why I feel like Allo and CFMs, that's the thread that we're pulling on.
It feels like to me. By the way, I love your answer. Like, as you were saying it, I was like, I need to like put this into like an Alan Watts chill step where it's just like you explaining Futarchy to me to like a lo-fi. Like, I would listen to that. But like my yes and on top of that is that we're um we're exploring networked ways of knowing. We're taking a network of participants and finding ways to sort of put barriers in the complex system so that they generate signal of what do these network participants think. And I think that it's really elegant because networks have edge-based wisdom and ways of knowing that ivory towers and governments will never ever have. And I think that there's something really beautiful in building network ways of knowing, and info finance seems to be the art and science of actually doing that. So I'm excited to take this like it feels like we're inventing like nuclear fusion, but for capital allocation. Like I'm excited to take that and bring it into GG24 and figure out how we can solve Ethereum's biggest problems with that. So um I want to take us on a turn in a few minutes into that conversation, but maybe if we could explore the abstract of the design space for another 3 to 5 minutes, that might be useful before we take that turn. Any additions on top of that?
So one thing that's been really interesting to watch is watching Allo like kind of emerge. Like there's like an emergent process, right, where it's trying to kind of discover itself and build itself. in the kind of kernel of the org. And I think this also, it goes back to where I think Gitcoin was at the very beginning, and then thinking about like at what point did things start to really break, or did things become more difficult to do? And I do think that I do believe there is like a fundamental, like, I wouldn't say flaw, and actually it's something that's well identified, but there is like a something that breaks in the entire DAO model, which is that DAOs often seem to like flout the rules that make the entire space work.
We don't
They
do
tend
that.
to,
No, ever. Come on. Sorry,
yeah,
Vaughn.
but not even just in terms of like what we do every day when we turn up in DAOs. It's more like the actual like idea of a DAO. Like the idea of a DAO is great, and then the actual delivery of a DAO, the execution itself is just strange. And I think that what it feels like is, it feels like I think I've said this elsewhere. DAOs always feel like they're a great V1, um, which ran into a lot of trouble, and so they end up just being a living in the shadow of the original, the DAO, and all of the potential risk that they bring onto the people who operate in them. And so that's the space they occupy. They don't end up being these proactive organizational structures. They don't end up being these like really progressive, what they could be, these kind of internet native organizations, which should look more like networks than they look like corporations. And they end up being this kind of in this in between space, right? This kind of liminal organization that's not quite one thing and not quite another. And though that's fine, and I think there's still some incredible things that DAOs have achieved. One thing that I remember, there's two real like great moments I've had with DAOs. One was when I realized that if you're a product manager, or you're product inclined, or even if you're just a founder, you can just walk through a DAO in a lot of ways. You can go and like walk through all the documents, walk through everything. It's like it's like an inside out org where all the information is on the outside in a lot of ways. And you can kind of go and look at that and see where the problems are and then directly solve them, which I loved. And I also loved that you ended up with this like core group and then just a mountain of service providers on the outside. So we have already achieved some of the things I think were like instinctively should be part of DAOs. I think those work well, but just the core organizing principle, I think, as Eric Olson says, like the animating purpose of DAOs is still for me incorrect. The idea is that you can build organizations that could be as large as the internet, like you can kind of galvanize the internet. That's the opportunity, but it feels like instead we build like houses for houses for risk, right? Like we basically separate out different different organizations, and we just put different pools of risk. Like we put labor in one, we put technology in another. Like that's kind of what we end up doing. And I think that's not, it's like a halfway step. And I really want to explore what the full step is.
How do you think? Well, I'll put down my soapbox. It's not near me right now, so I won't get into the structure of the DAOs. You've hit on a lot of valid points there. Um, I guess tying back in, like, in this conversation, is it allocation methods that are one of the tools that we should be leveraging more within these organizations calling themselves DAOs? I'm not going to call them DAOs because they're not, or most aren't, I should say. And how do you prevent, I guess, that version of when the day comes that it's easy to spin up a market, it doesn't turn into more navel gazing in terms of making decisions at the expense of efficiency?
Yeah.
Solve my
Um,
problems for me, Vaughn. Thank you.
this is great. I think that for me, I think model that we all have of an org, that it is an entity. And so that's where we start. We're like, where do I want to point to the DAO. Now, I think that I would describe, say, let's take, for example, Uniswap. I would say that Uniswap is a DAO, but the DAO isn't the assembly of token voters. The DAO is, in fact, the assembly of token voters as one entity. It's the Uniswap Foundation as another entity, and it's like labs as another entity, and then it's the code on chain, and it's the collective that we should consider the DAO, and it's the interactions between those groups that we should consider the DAO. And so maybe you could consider with Gitcoin that Gitcoin plus Allo.Capital, like that's the DAO. Like the DAO is the combination of those organizations. It's not, and that's how we should think about it, as a network of orgs. And that's kind of maps to what we're seeing Arbitrum do, right? Where they're deciding to create this like network of aligned entities. But then this should be the DAO. Not, we shouldn't just consider that the token voters are the DAO. They're actually an important chamber, but they're not necessarily the entire organization. Just like, so I'm actually really bad at US government, but let's say one arm, like the judicial arm of the United States government, isn't considered the government, right? You actually need all of these things together to constitute at least the governing apparatus, but at the same time, you still need the people, right? Like the people of the US plus all the businesses plus the government is considered the US, right? Not just one of these groups. And that's kind of my model on DAO. So that would be my solution. I'd suggest building your model to subsume all of those entities underneath what you collectively call the DAO.
Some of the parts to be very reductionist in terms of what you're saying.
Yeah, yeah, yeah. Exactly. Yeah. Yeah. But then if you think about it that way, then it does change your model, right? You start thinking about capital allocation across those entities. You can start thinking about division of powers as well, separation of powers of entities. And if you think about it, that's kind of what we're slowly morphing into, where we're having to come up with these different entities, packaging things in those entities, but then creating relationships with other entities. And I think it's the relationships, right? It's the edges, not the nodes, that matter.
Mm.
Like I always think about CFMs really as being like multilateral financial treaties between orgs, right? That's what they could be. They could be teams, like you could think about Gitcoin grants, really, grants rounds as being treaties between orgs, right? Multiple teams coming together to fund the things that are useful for the collective, which is again why I think they were so powerful in at the beginning. I think they had a lot of that, lots of the interest because they were doing this job. They were fundamentally solving this job. If you consider Ethereum itself as a DAO, right, which has all of these entities in it, and I think actually even recently, I saw that the EF were hiring for like a funding coordinator, someone who works between the pools of capital going that are being built up and allocated across the ecosystem. So again, I think this is the real thing to try and figure out is how can we build mechanisms that connect all of the points of the ecosystem so it can act as a coordinated whole, the DAO, rather than the individual entities and the things that they care about.
I love that. I love the non-rivalrous view. We've definitely seen it. Cabals, Milwaukee, anything to add?
I think about like the evolution of the corporate form a little bit here, where, the start was we need the ability to pool risk and do things together. And the first company was the East India Corporation, which was basically like almost a state subsidized organization that allowed Britain to go to India and do commerce there. And then there's sort of like 300 years of evolution of the corporate form. And 50 years ago, we invented limited liability corporations. And then, like 10 years ago, now we have B Corps, where you can actually put like the public benefit in your. And so it's been this constant evolution of how humanity coordinates. And so, what I think of when we're talking about this is that, it's easy to criticize the first 5 years of DAOs because we just took corporations and put them on chain. And now we have token voting and like delegated token voting and quadratic token voting. But play forward 300 years of evolution, we're going to have things that look completely different than DAOs do today, just like companies today look way fucking different than the East India Corporation. And they're not evil and colonial. They can actually be like B Corps now. Like, some corporations aren't evil. Okay. Um, Rena's giving me the side eye for the audio listeners here. But I guess my point is my provocation is like, what does the next main evolution in DAOs look like? And if the invention of the LLC was an accelerationist movement for the corporate form, what's the invention of the LLC but for DAOs going to look like? Where it creates like a punctuated equilibrium. We all evolve around that. And I think that that's kind of what we're playing in on-chain capital allocation is creating these new circuits that are like they seem frontier and advanced now, but I think it's how the world will run in 20 years. We're going to evolve way faster than like, it's not going to take 300 years to evolve DAOs like it took 300 years to evolve the corporate form also because the internet like speeds up the clock speed of everything that we're doing also. So I don't know if you guys have any riff on that, but that'll be my last big abstract philosophical point to make before we actually steer into the practical.
I actually want to know, Vaughn, if you think that CFMs and Futarchy, like Hansen wrote that doc, I'm not even like however many, 1990 was it? How old am I?
It's late.
What
It's
year
like
is it?
2000, I think.
To like 25 years. Okay, that's enough. Um,
Yeah.
I'm
Yeah.
wondering if you've got any takes in terms of if there will be evolution in, I guess not necessarily in how the communities use it or how people use these mechanisms, but the actual mechanisms themselves, or if there is any ideation in where that could go to, or is it fixed? And that's the beauty in it as well.
Yeah, this is a really great question because I think that we're seeing Futarchy being like tested in real time. And it's the rubber meets the road moment where you try things and all you had was theory, and then you suddenly have experience, and then you have to adjust. Yeah, so I think we're in that period now where we're trying things and we're having to adjust. So we're seeing the limits of theory, right? Which we know is theory. We have conjecture. This thing could work, and then we have experience. This thing did work, and these things did not work well. And I think maybe there's some. So Prophet wrote a good post earlier about things he's learned since starting Meta. Obviously, they've been running for a little while now, so they've had some good learnings. And I'd say so far, it does seem that you do need to have huge gains for people to want to switch, right? When you're talking about
Mm.
when you're talking about adoption of a technology, you do need to have like really huge upside for people to be willing to switch. And I think that Futarchy's promises have always been at the government level, and so sometimes for individual organizations, it's quite difficult to justify switching, right, your entire decision making mechanism. And so I think what we're seeing now is this maybe diverging paths, but there's a world where you try and make the value of Futarchy greater, and that's and the way you would do that is you add, right, you have to increase the maybe the surface area of Futarchy, so it's tackling bigger things. And I think in doing that, it changes the nature of Futarchy. It changes the things that people will spend their time predicting. And the other solution is you try to minimize, right? You make the risk a lot smaller, so that by comparison, the upside is greater. And there, I think there's also like for example, we're doing conditional funding markets, and conditional funding markets are really just looking at how to allocate capital. They're not talking about fundamental redesigns in governance. And there, I think you can see how, not necessarily that things are changing already, but you can see based on those paths, right, how the technology will change, how it will be adapted to those use cases. And we're already finding that. For example, we picked scalar markets, which predict a you're trying to forecast a particular number, like an expected value within a range, rather than just a binary yes or no. And that
42.
changes the way that. Pardon? 42.
42.
Yeah.
Sorry.
Exactly, yeah. And that honestly, that's like that changes the nature of what you're building, right? It changes the type of people who can participate. It changes how they'll think about the markets, and I think that's it. But so far, we don't necessarily have a model that I think the future of Futarchy, of a like a society level Futarchy, like the adoption of the technology at large, isn't that there's a Futarchy that's necessarily being built and deployed as a service, I believe, or is it something that's serving some um, like particular goal? Like it's been designed by someone and deployed to do something. I think a Futarchy, kind of like markets, I feel like it will be kind of self-serving, if that makes sense, kind of autonomous, like the A and DAO. And that's really where I think that's the kind of the apex. That's what we're kind of going for, is how to get to a Futarchy that is kind of self-sustaining, like it's doing a really important job, and it's continually doing it. In the same way that we rely on other types of organizations and institutions to do this job of allocating capital on our behalf, making decisions on our behalf, I think having Futarchies that do that would be great. And all the work we're doing at the moment to build them and train them and test them is just trying to get to the point where you do get like a Futarchy singularity moment where it's kind of just doing its own thing. Uh, so that's my goal. That's where I think we're going.
That's amazing because that's kind of it sounds like it ties back into like that network and that network state of bringing all of those nodes and the edges together as well. So that sounds cool to me. Let's go.
Yeah, very
Forward
cool.
to the Futarchy singularity.
Yeah.
Um, Vaughn, I'm going to switch us gears and we're going to go from the abstract and philosophical to the extremely tangible, which I like to zig and zag between both of those on these episodes. GG24 is coming up probably this summer. I don't know. We'll see what governance decides, but Gitcoin, I think that one of the visions that is being kicked around for Gitcoin grants is, what if we weren't just quadratic funding and, working backwards from quadratic funding, but what if we were working forwards from what are the most innovative mechanisms out there? And how might we take Gitcoin's really sizable matching pool? We've got $11 million, I think, left. And at $1 million per round, that's 12 more rounds, and 2 rounds a year. That's 5 or 6 more years of funding Ethereum public goods. What if we were to take $1 million and, put it through a pluralism of mechanisms to fund what matters to Ethereum? And, maybe instead of calling it public goods funding, what if we were just solving Ethereum's biggest problems in 2025 using these things? And so, how might we apply Futurarchy in GG24? What do you think Ethereum's biggest problems are, and how can we create futarchic models that are actually helping to sense make and to solve them? And, I think if the Ethereum Foundation is sort of like the cathedral here, if it's like the centralized hierarchical organization driven by the executive directors, how can we build a bizarre network-based intelligence that complements what the central planners are doing in the community? So in what ways could we leverage Fugarchy to solve Ethereum's biggest problems and maybe use Gitcoin grants as a way of bootstrapping that? So, Vaughn, where do you think we should start?
Yeah, so it's really funny you say this. Like, so Gitcoin was like originally in consensus, right? So
Yep.
I was never part of consensus, but I built something that competed with consensus, and so I had an intimate understanding of how consensus worked. And what's really funny is I believe that at the beginning, one of the things that worked really well was you did have the cathedral in the F, but then you had consensus next door. And but if you think about, you just said
Two
the bazaar. If you
cathedrals.
two cathedrals, but if you think about, like, at least from what I remember, based on the people I interacted with, is that consensus was organized really around, was it Rare or Capcom? It was like any project goes, you can just decide which project you want to work on. Like, it was a bazaar. It was kind of like a idea bazaar. Now, maybe from the inside it didn't feel that way, but that's certainly how we were kind of. That's kind of the model we had of it from the outside. And I think that like that energy definitely feels like it's gone, right? Like that energy definitely isn't there anymore. There's no concentrated pool of like liquidity or capital that's just trying to grow Ethereum, right? Like, just that's all. It's its only job. And I think that just to kind of take a quick sidestep into kind of poly-sci and talk about Ethereum. I think that Ethereum is definitely. I'm just sorry. I'm just looking at my hat here, which is bring back Futarchy. Bring back Futarchy. It's always close to me. Um, you definitely get the sense that the EF is technocratic, right? That means that the developers are in charge, the researchers are in charge, and they prioritize the things that they think are important. And this has served us incredibly well. But we forget that there was this like invisible hand of the consensus just constantly building things that people needed, right? And that was driving growth at the beginning. So yeah,
Yeah.
I feel like the thing that Gitcoin GG24, it should kind of like maybe bring that back. Let's bring back that and let's get as much capital concentrated purely on growth. And I said that the world computer must scale, but it's not just the throughput, right? We have to scale the demand, right? We have to get people using. We have to build things that people actually want to use. So I think that that's 100% the biggest problem at the moment. It's not the fact that the the raw block space doesn't support the things that we want to put in it. It's that we don't have good things to store in it. So that's why that definitely for me feels like the main thing we should be funding.
Yeah, so what I heard there was sort of like a playing through if the bootstrap function of Ethereum in 2017 at the app layer was consensus, and however effective or ineffective we think that is, or you had to have access to Joe Lubin versus permissionless, that is, I think we're going from a world that was like centralized and hierarchical and you needed access to Joe to a decentralized permissionless world. And Futurarchy could maybe be used to accelerate the people who are consuming the most block space or having the most product market fit in a decentralized edge-based intelligence way. And so that sort of leads me to like, what if we had a futurarchic market that rewarded people on the basis of how much block space they consumed or how many unique users they brought on chain? What's the actual tangible experiment that we could run in GG24 that feels like a conditional funding market that actually helps the ecosystem?
Yeah. So this was definitely the part of your question I did not answer, but I think that that would be the goal. Well, let's start with an objective. So the objective would be something like we want to, let's say loosely, say we want to grow Ethereum, and we all agree that the best way to measure that would be something like block space. Now, we all know that the problem with measuring block space is that, you can just fill blocks with things that are useless. And so it's not a great metric. But let's assume that we had a way of qualifying the information stored there to prove that it was valuable. Then let's say we have this like proof of valuable block space metric, and we're able to just prove that. We could use a Futarchy or a conditional funding market to fund things that we think will create the most valuable blocks in the future. And that is an incredible idea for a conditional funding market. And I hope that that's what we end up getting to launch in GG24. Because I think that like it's there is no more important problem to solve for Ethereum. It doesn't have many of the other problems. It has no problems unless it can do that job, right? Unless Ethereum gets people to build things and deploy things and store things on Ethereum that are very, very valuable, then there eventually will be no Ethereum. So that feels like a great thing to spend time on, and CFMs are well set up to actually fund that.
Rena, what do you think? You know Futurarchy, you know Gitcoin. What's the intersection of these two design spaces?
Oh, sure.
Did I
Let
just
me
put you
just
on the
solve it for
spot?
you guys. You totally did.
Just thought
Um,
lead. It's only your third podcast as co-host. Come
no,
on.
it's totally fine. I have nothing else to do with my time than to think about this one specific problem. I do completely agree with you, Vaughn. I think that I think that there's some things that I always think about when it comes down to taking like CFMs and what that looks like. I mentioned it a little bit earlier, which is just that version of like, how do we decide on what that metric is? And how do I not spend the next 6 months of my life talking with our community on what that metric could be? And then, of course, the other side of it, and we saw this a little bit in GG23, we spent a lot of time thinking through what metrics we evaluated for the people participating and the projects participating in order to make it proper, open source software or public goods. Is it non-rivalrous? If we say this about one group, or if we say that this is the metric on one group of people, are we automatically excluding another one? All that to say, like, I'm definitely not disagreeing with any of it all. It's more just along the lines of like, I think there's some really interesting ways that we can aim the entire your Ethereum ecosystem. We can aim them in a direction that gets them engaged. Um, I think that one thing that you really kind of stuck with me on what you said to your previous answer, Vaughn, was like not the scalability, but the size of things and like how we came into DAOs and we came into Ethereum and like everyone wanted to build an app and using Futurchy to scale a shrinking number of people that are excited about donating to public goods and figuring out how we can make all of these things work in concert with each other in a way that's like equitable with the mechanisms that we're using. I feel like I'm using a lot of word soup right now, but you're nodding like you get what I'm saying. Ish.
Yes. Yeah, yeah. I got it.
But
The,
does the
the
audience
metric.
get what you're saying?
All right,
Vaughn,
we'll
do you want to
find
say
out in
that
the
back to her?
comments.
Yeah. So one of the things that we obviously are going to run right into is this metric question. It's all well and good picking objectives. Very hard to pick really, really useful metrics and it's important that measure progress towards that objective. And so the reality is there's never normally one that does the whole measurement. And any one you pick always will have some flaw. Some of them actually are just really gameable. And sometimes that's the reason why they're not good for markets, for conditional funding markets or any kind of futarchy, because you can just game them and then basically just produce mint the incentive, right? So so the reality is we probably need to use a basket of metrics, but I think it does call into question that like why do we sometimes say it's not worth running one of these, or like using metrics or picking metrics is hard. And so the default is then just to rely on someone to just make a choice. And when someone makes a choice and they use conviction, right, they're just saying, oh, maybe this one feels like the right move, but they're still doing the job, right? Yeah, but they still have to do the job of assessing how they expect to measure progress and then integrating that information into a decision. Like it's not like they get away from the process. It's just that maybe when we have a public, collaborative process by which we decide a metric, we just have higher standards versus when an individual person who we just trust just says, this is what we're doing. We're just going to invest the capital. And I think it's because we maybe have a higher threshold for higher tolerance for failure at the individual level, but it's really hard to fail when there's a lot of people working together publicly. And so I do think that this is maybe a path here is instead of picking metrics and then saying these are the metrics, right? is instead to present all of the possible metrics that already track the thing we care about, and then kind of letting people self-select into them. And you can actually do this with, not that this is something we've built, but you could do this with capital. You could have people self-select into markets that are tracking individual metrics or different ones based on what they believe is most likely to produce the objective that they care about. And so I think they're just like the mechanism by which we select metrics as well is something to design, something to work on, something to improve. And just because we decide not to use them because it's hard to pick a metric, it doesn't mean that a metric isn't being selected, right? It's still always a metric. So yeah, I just think that that means that we should feel like fairly positive about our opportunity here and positive about the potential outcome.
See, you totally got my word soup. You answered that perfectly. That was exactly it. I'm assuaged.
Thank
I
Thank
hope
you.
so.
thank you for laying that out for the audience. Um, Vaughn, here's some CFMs I'm interested in launching. I want to in GG24 know which Ethereum apps are generating the most funding flows for Ethereum. So basically, how do we generate demand for Ethereum? And I think you could measure that by block space consumed or daily active users or other metrics that are hard to game or at least unprofitable to game. I would really like to have a futurarchy market for Allo. I would love to know where the TVF total value flowed through the Allo ecosystem is coming from. Is it conviction voting? Is it commitment pooling? Is it quadratic funding? Creating a market where we're generating signal of, okay, this month the most TVF is coming from mechanism X, but 3 months ago it was coming from mechanism Y. That data is really important to me as an ecosystem builder. So, in what ways can we formalize and imbue those metrics into the Allo ecosystem? And then, I'm really excited to see a world where there's CFMs running for every uh, blockchain ecosystem, L2s on gas space consumed or DeFi on total value locked or total value flow, like creating markets where we can start to reason about these things and generate signal for them. I'm excited for that world. So I don't know if you have any reaction to those tangible examples, but now that I understand Futurarchy and CFM, I want to launch a bunch of different ones and see which ones are the most useful.
I mean, I think this is the main crux, right? If we could, the best thing I think we could have is like a Ethereum ecosystem dashboard. Actually, I think I've been looking at the token terminal ones, which are pretty good. They have like some on like GDP, which I think is a good measure. Like if we came up with a measure of GDP. So if we had all of these, we could just run this board and imagine a world where you could just launch a CFM on any of the metrics on that dashboard, which would be pretty cool because that's really what you're talking about. If you, and you actually said it in your tweet, if you just had a dashboard of all of these metrics, you could think about which ones are most correlated with the outcomes you want, and hopefully they're causative and they're causal, and then you could actually just run markets from them, which would be incredible. Now I think we're still quite far away from that, but that's the goal. That is the goal, 100%. I think that's what we should aim for. And I think GG24 could be the first time we kind of maybe run some consecutive ones that are exploring different parts of the kind of metric landscape, or at least the kind of the information landscape. But the goal is to explore the whole thing.
Vaughn, in a world where you're maximally successful in 10 years, what does that world look like? Is there futurarchy for everything? How does that change the world? Play us forward into 2035, where futurarchy is everywhere.
I think there's a lot of parts of the world where people get together, they pool capital, and they try to figure out where it should go. I think in 10 years' time, all of that will happen on chain. I mean, even if it's not necessarily Futarchy, it would all happen on chain for reasons that I think are hopefully clear. Um, and I think that the opportunity here is that institutionally, we have a system in place that has kind of taken on the burden of doing this job for society. Um, because if we're doing it a lot and we're doing it really poorly in general, this is a big cause of concern, right? It's just like public sector funding, government grants, funding science, all of it. And we just have tons of different ways of doing this. Now, if Futaki is like proven to be the best, then we very quickly need to get as much of the world's capital push through these things and get it allocated as quickly as possible. So my strong bet for like 2035 is that a significant amount, like trillions, is just flowing through CFMs and flowing through CFMs in a way that like people don't even think about it. It just becomes a normal part of the decision making apparatus. That's how we allocate capital. In the same way that we all expect. I actually was at an art gallery recently I was at the Whitney actually in New York, and every painting you see, or at least every exhibition, there's like a little list of names right at the bottom, and a bunch of sponsorships, and like that's capital allocation that's happening, right? There's money being delivered, and there's normally reasons why it's being delivered there, right? Like, why would you fund a gallery? Why would you fund a specific exhibition? And so this is the kind of capital allocation. These are the kind of capital allocation problems that I think CFMs could absolutely handle. But I think it's going to always be an institutional problem where we try to get adoption for these new mechanisms. And that's really what I hope does change, is seeing capital allocation happening outside of crypto on CFMs.
Love that. Is that the Futarchy apocalypse or the Futarchy event horizon? What did we call it earlier?
Singularity.
Singularity, Futarchy Singularity. That might be the episode name. Is there anything I didn't ask that you want to say?
No, that was great. I love the session. I think we covered most of the things I wanted to speak about. So I'm super excited and can't wait to launch GG24. Let's
I
get some
think Vaughn
CFMs in there.
wanted to see your man necklace, Iwaki. I think that's what Vaughn wanted to ask you.
Okay. Well,
What,
since
what have we got
Rena
there?
brought it up, I did just get a custom Allo necklace made, and you have to be watching on YouTube to see it. If you're an audio listener, you just have to imagine that I'm a vibe lord now. I've got a custom necklace. Thanks
So
for
what is
calling
it
that
made
out
of?
at the end. I should know the answer to that. Tokens. It's made of tokens.
It's made of tokens. It's made of
My
pure tokens. I love
tears.
it.
It's made of my tears. That's what it's made of.
All
When do
right,
we
we're
get one?
continuing. You get one when you launch a Futarchy market that solves Ethereum's
GG24,
biggest
baby.
problems in GG24.
I
Yes,
will hold you all to that. That's
that's
the
how we're gonna
plan. I
land this
can't
plane
wait.
at the end of the episode.
I
Vaughn, I
can't
think you're
wait.
doing great stuff. I think that Futarchy and info finance is a huge part of the capital allocation layer of the tokenized internet. So excited to be on this journey with you. Thanks for being on the podcast. Where can people find you and check out there if they want to learn more?
Absolutely. Goes to x.com, not Twitter, /butterygg. The GG stands for governance games. And you can also find us on GG Research. It's like ETH Research, like the .ch thing. We thought that was hilarious. Maybe just us. And then obviously you can go to our website, which is just buttery.gg.
Great. All right. Thanks again.
Thanks, everyone. Cheers. Bye-bye.
Alrighty, you just heard from Vaughn. Really excited about Butter and Futurarchy. I think that it's a really exciting design space within the larger design space of on-chain capital allocation. Thanks again for listening to the Allo.Capital podcast. This podcast features the people who are building the capital allocation layer of the tokenized internet. Disclaimer: this podcast episode is for informative purposes only and is not financial advice. Do your own research. Do not make financial decisions based off of these episodes. In addition, disclosure: I own crypto assets like ETH, DAI, USDC, and GTC. This was a fun episode with Vaughn. This is I think it's really exciting what's going on in Futurarchy and prediction markets, and I am keen to see what happens in this design space, and especially with GG24. All right, until next time, I will see you all. Goodbye.